Microsoft has generated several billionaires and several thousand millionaires throughout the years. They are a global giant and make a ton of money, and they have a ton of money to give. If you're not currently part of the Microsoft family, you must watch this video and join us. We welcome you to the family. Now let's go get some of that Microsoft money. In this video, we're going to take a look at some of the amazing, fascinating facts about the Microsoft Corporation. And in the second segment of this video, we are going to take a look at the fundamentals of the corporation. And in the third segment, we are going to look at technical analysis. This is going to show us when to get into the stock. We will be implementing proven, successful, strategic strategies on when to buy the stock, so we're not guessing. I've been trading and investing in the stock market for over 25 years. In a world driven by technology, one company has consistently shaped the way we live, work, and connect. From humble beginnings in a small garage to becoming a global tech giant. In 1975, Microsoft was founded in Albuquerque, New Mexico. Two childhood friends, Bill Gates and Paul Allen, saw the future in personal computing. Their vision, a computer on every desk in every home. With the launch of Microsoft, short for microcomputer software, they began writing software for the MIT's Altair, making the dawn of a new era. This historical landmark deal that put them on the road to success was in 1980 with IBM to provide an operating system for MS-DOS. 1985, launch of Windows 1.0, the first graphical user interface for PCs. When the 90s came, Microsoft dominates the tech landscape. Windows became the world's operating system, and Office revolutionized productivity. But with great success came great challenges, antitrust battles, competitors, and the dawn of the internet age. Microsoft launched Office Suite in 1990, and Windows debuts with the iconic Start button in 1995. Now, in 1998, the US government files antitrust lawsuit against Microsoft. They questioned the success of this amazing company. This has to be a monopoly. We must break this company up. This went on for several years and failed. In 2000, Bill Gates has had enough. He steps down as CEO. Steve Ballmer takes over. Microsoft faced fierce competition, yet it diversified with Surface and the birth of Azure, its cloud computing platform. The company evolved, but critics questioned if it could keep up with Apple and Google. In 2001, Xbox launches, entering the gaming industry. 2007, Windows Vista, controversial, and later Windows 7, which was acclaimed. In 2011, Microsoft acquires Skype for $8.5 billion. In 2014, Satya Nadella becomes CEO, shifting focus to mobile first, cloud first. Under Satya, Microsoft underwent a cultural and technological renaissance. Cloud computing, AI became the new frontier, and partnerships once deemed impossible, like work with open source communities, flourished. From 2016 to 2025, accomplishments include acquiring LinkedIn for $26.2 billion, GitHub acquisition, embracing open source. Microsoft teams in Azure soar during the pandemic. They invested $10 billion in OpenAI, ChatGPT integration. They became a $3 trillion market cap corporation and are considered one of the global leaders in the AI, cloud, and enterprise solutions. From a dream in a garage to shaping the future of AI, gaming, and cloud computing, Microsoft's story is far from over, and it continues to push the boundaries and stay current with the evolution of technology. As time marches on, we must march with it to stay relevant, or we will be left in the dust watching our old VCR movies, playing our vinyl records, and waiting for our pager to vibrate. If you have something you would like to share with us, please leave a comment below. We want to hear from you. Microsoft Corporation closed August 15th of 2025, $520.17. The current market cap is $3.87 trillion. The average volume in this stock traded per day is a little over 18 million shares. The current PE is 38, which is considered to be on the high side. But considering we're in a bull market, your PE ratios are going to tend to run on the high side. Let's take a look at the financial statement. When we go
go back to 2021, the revenue was 168, the net income was 61. And when we fast forward to 2025, the revenue is 281 and the net income is 101. That's a year-over-year change of 14.93%. The operating expense is up 6%. The net income is up 15%. Your net profit margin is 0.53%. The earnings per share is 15.59%. This will show up in the charts. We're going to look at the total revenue and the gross profit. And here's the reason why. So from 2022, we've got 198 with a gross profit of 135. The total revenue in 2023 is 211 with 146 gross profit. 2024 we have 245, 171 gross profit. In 2025 we have 281 with a gross profit of 193. And the reason why this is important, this is just to give you an idea that this company is going to have a real hard time growing at that 200, 300, 400% scale that it has done in the past. What that's going to do, it's going to give you a solid foundation. This company is a global giant. They make a ton of money, and you want this company in your portfolio. You should have the S&P 500 and the NASDAQ 100, the NDX 100, but you want those invested in your portfolio. This is going to give you multiple sectors. You're going to be well balanced in different sectors, and you're also going to be invested in almost 600 companies. Let's get into the charts.
Technical analysis. What technical analysis is going to do for you, it's going to help you with your percentage ratio. The more time you put in and the more analysis that you give to the stock, you're going to increase your percentages of being right. You're not going to be right all of the time. The stock market's going to crash. The stock market's going to go into correction phases. Nothing is guaranteed in the stock market. But what technical analysis is going to do, it's going to increase your percentage of possibilities. It's going to increase your percentage ratio of probabilities, which is going to ultimately increase your profitability.
We are currently looking at a 20-year monthly chart. Each candle represents a month. Now, Microsoft had several years. The company consolidated, and then we went into a bull phase for the past few years. Here's our 2022. We had a 10-month market correction, but now we're back off to the races again. We're going to zoom in on a 5-year weekly chart. Each candle represents a week. This is our 2022 10-month bear market. The company recovered from that, went sideways for a few months, and then at the beginning of the year we had several months of a correction. The announcement of the tariffs caused a lot of this, but we've been currently in a bullish phase. We're going to get a little more granular. This is a 1-year daily chart. This is the white line is going to be your 10-day moving average. The purple line is the 21-day. The green line is your 50-day, and the red line is your 200-day moving average. What we want to look at is this gap right here. What I do not like about substantial gaps at a large percentage ratio, it's typically met on the other side. We don't know when this is going to happen, but it's typically going to be met with a similar percentage downdraft. So as far as trading into this right now, I would not trade into this company.
I put some links in the description of trading platforms and financial institutions so you can set up your account and start building your retirement portfolio today for your future.
You want this in your portfolio. You want to buy it with the ETFs, either the S&P 500 or the NASDAQ 100. Those are going to give you a well-balanced portfolio of 600 stocks. But if we're going to buy into this, we want to look how the company has been respecting the 10-day moving average and occasionally kind of pushes into the 21-day. It looks like it touched it here, and it's currently at the 21-day. Now, what I do not like is this volume spike here. When we look at this volume that came in, the stock gapped up similar to this, except for it's sold off all day long, and then now it's retracing back to the 21-day moving average. But the good news with this move, this gap has been filled. This part of the equation has been corrected. This part of the equation is still an imbalance, and we have to be very careful of this. But what we want to do, if you want to trade into this stock, you can take a position at the 21-day, but there is going to be a major downdraft, and this correction portion here with this volume, the average daily volume is 18 million shares traded per day. And on this day, we are looking at July 31st of 2025, we had 51 million shares were traded that day. The stock gapped up and sold off, and it's been selling off. But if you absolutely have to trade this, you want to put a tight stop in, but you have to know you can wake up tomorrow morning and this stock is going to gap down at some point. So there's better setups in the market, but if you want to trade this, you can buy at this particular point of the 21-day moving average and put a tight stop in. Your stop is going to be below this day here, which is a low of 517.55. Give yourself a little bit of room. Put a stop in at 516. If you get stopped out, you get stopped out. That's part of the game. You want to protect yourself. That's the most important thing, is protecting your portfolio. If you're trading, you're at extreme risk. Just keep that in mind. This stock here, the structure, I do not like it. There's better opportunities out there. I hope this helps.
For more analysis like this, subscribe to the channel. We'll keep you informed on the latest, greatest companies to invest in. Always remember that the markets are risky, and the key to success in this industry is a well-balanced portfolio. God bless and happy investing.